Welcome back, guys. I'm going to show you a couple of trades I took on Friday that I sent out to our signals group. We took a long and we took a short, and I'm going to show you the thought process behind both of them and basically how I arrived at the decision for each trade. If you already haven't, definitely subscribe. And yeah, let's get going. So there's a couple of things that stand out to me right off the bat. The first is all this stacked liquidity here. That's a prime target. This may be a target for next week. So right off the bat, my immediate target and area of reaction is here just off the 4 hour. Nothing too complex about that. The reason this is a target is for the obvious reason that it's just liquidity sitting there. But if we just look at this, the internal ranges have just been pushing down. So to me, this is a market rhythm. So generally, if the market does something and then it respects it, and it does something and it respects it, you basically expect a push in the same direction. It's almost like a heartbeat, if you will. The other thing is this market has been playing from this low to this high this whole week. So usually when the market just plays within internal ranges, and the reason I say these are internal is because they've actually broken nothing of any value. But yeah, when the market just plays within internal ranges, it's going to seek out external liquidity to keep on moving if it hasn't been able to break out of the range in a matter of, 2, 3, 4 days. In this case, we were stuck in the range for 6 days. So this is the last low that put in this high. This is your last break of a range. It's the last push that matters. All of this it's just liquidity. It's broken nothing of value. It's really taken nothing of value. So everything in here was short trades. For those of you that checked it out, I showed how I took some of the trades in this range. Yeah, so right off the bat, what I want to show you guys is this is kind of a lower time frame continuation is kind of my expectation at this point. And the only reason we're going down first is because we actually need liquidity to keep moving. And if we just look here, you have a lower time frame order transfer zone, and you have a lower time frame lit zone. So let's a continuation model, meaning that we got to be going in that direction to use it. And that's where our directional bias came off the 1 hour. You made a low, you pulled back, you made a low, all internal. But the expectation is to just target the external of the range. And the expectation for next week is to continue up. So price taps in here. This is the first trade. We just need something to show us a valid reaction. And there's your valid reaction. You can execute this. And I usually go, so this is about 7.5. It's GU. I'll go 2 back. Don't choke your trades. Go to the first reactional area. So this was trade 1. So just to show you guys this. Alright, so that was trade 1. I might have went a little too far. We'll just go back here. That's trade 1. The second trade was going to be based on fundamentals and how the news get released. So in this case, ISM manufacturing comes out a lot worse for the States. Now, initially, you can obviously see what happens, but initially this was going to be my target. And for those of you that have watched the previous GU short I showed in here, I explain why I use the extremes of any bullish or bearish leg. You can check that video out. That was going to be my initial target. So I use DXY to manage trades. So DXY unfortunately hit TP way before GU, so I'll actually close the trade based on that. Within this fundamental push, there's nothing to do but buy. And we just want to make sure we're going up. So when it comes to news, I just use seconds because the candles are so much bigger anyway. So this to me is basically enough to execute. Go back, just cover something decent. The expectations for price to continue. So this was my original target. I don't remember how big the stop was. It doesn't really matter. It goes to the same place. So we started build up. At this point, you assume price is going to go up and target something. If you wanted more certainty, you could have just waited for the news range to break, and you could execute here, cover this low. Would have been the exact same. If you didn't want to use seconds, what you could do here is just wait for 2 internal breaks. 1 break, 2 break. You can execute that bullish candle, cover something below here, you should be good. Yeah, so this was the initial thought, which it actually does go to target. I didn't hold it to that. I ended up closing this just under 2R. And the only reason that was is, I'll show you guys. If we just go to DXY, what is going on here? Oh, I know. Alright, so DXY, my target would be the exact same. And for me, it doesn't matter if GU hits the target first or DXY. I'll close the trade when the target gets hit. I've just seen price do this enough where GU won't even hit the target. So for me, that's a cue to close. I manage my Euro trades the exact same. Some days it really sucks because you'll close the trade 2 hours early, but I would say over 50% of the time I actually get to make money on the trade because I use DXY to manage. So it's something I've tested out over I'd say I probably have at least 12 months of data at this point using DXY to manage. So that's okay for me. So DXY hit TP somewhere around here. I just closed the trade. Did it run to TP here? Yes, it did. Does it run to TP every single time? Unfortunately, that's not the case. Usually if DXY hits the valid reaction area, that's enough for price to just do this. Obviously we had the fundamental push, but like I said, based on pretty much a year of data, I've used DXY for about a year now for management and entries. And in about a year of data, I would say it's worth closing your trades if DXY hits your TP. And that's been it's been really good. It's helped me TP a lot of stuff that wouldn't have otherwise hit TP, and it just keeps you making money consistently. But yeah, I hope you guys enjoyed this, and I will see you in the next recap.